Everyone, we have a filing to talk about out of the NASDAQ. This one is SR NASDAQ 2022-0, and this is to modify certain pricing limitations for companies listing in connection with a direct listing with a capital raise. Let's go ahead and take a look. Look at that diamond. It's beautiful. Okay, so the purpose of this one, in 2021, NASDAQ adopted listing rule IM-5315-2 to permit a company to list in connection with a primary offering in which the company will sell shares itself in the opening auction on the first day of trading, Robinhood, on the exchange. A direct listing with a capital raise is the other term used to describe this rule. And this created a new order type as well. This rule did. It was called the CDL order, which is used during the NASDAQ halt cross for the shares offered by the company in a direct listing with a capital raise, and establish requirements for disseminating information, establishing the opening price, and initiating trading through the cross in a direct listing with a capital raise. So basically, they adopted a rule which allows a company to list in connection with a primary offering in which the company itself will sell shares itself in the opening auction on the first day of its IPO. So for direct listing with a capital raise, NASDAQ rules currently require that the actual price calculated by the cross be at or above the lowest price and at or below the highest price of the price range established by the issuer in its effective registration statement. Now, NASDAQ now proposes to modify the pricing range limitation such that, provided other requirements are satisfied, a direct listing with a capital raise can also be executed in the cross at a price that is at or above the price that is as low as 20% below the lowest price in the price range established by the issuer in its effective registration statement, or at a price above the highest price of such price range. Specifically, to execute at a price outside of the price range, the company's registration statement must contain a sensitivity analysis explaining how the company's plans would change if the actual proceeds from the offering were less than or exceeded the amount assumed in such price range, and the company has publicly disclosed and certified to NASDAQ that the company does not expect that such price would materially change the company's previous disclosure in its effective registration statement. NASDAQ also proposes to make related conforming changes to this rule as well. So the current direct listing with a capital raise requirement. Currently, a direct listing with a capital raise must begin trading on NASDAQ following the initial pricing through the cross, which is described in rules 4120C9 and 4753. Also, currently, in addition to pricing within the price range limitations, Rule 4120C9 requires that in the case of a direct listing with a capital raise, for purposes of releasing securities for trading on the first day of listing, NASDAQ, in consultation with the financial advisor to the issuer, will make the determination of whether the security is ready to trade. In addition, under Rule 4120C9B, NASDAQ will release the security for trading only if all market orders will be executed in the cross. If there is insufficient buy interest to satisfy the CDL order and all other market orders, or if the price range limitation is not satisfied, the cross would not proceed and such security would not begin trading. In such event, because the cross cannot be conducted, the exchange would postpone and reschedule the offering and notify market participants via a trader update that the direct listing with a capital raise scheduled for that date has been canceled, and any orders for that security that have been entered on the exchange would be canceled back to the entering firms. So it looks to me like they're trying to prevent fire sales from happening on the first day of IPO and participation in the cross. That's why they're increasing the thresholds to be allowed to do this. Now, while many companies are interested in alternatives to traditional IPOs, based on conversations with companies and their advisors, NASDAQ believes that there may be a reluctance to use the existing direct listing with a capital raise rule because of concerns about the price range limitation, which is, again, what this filing is about. It's going to widen that price range limitation. The opening auction and a direct listing with a capital raise provides for a different price discovery method for IPOs, which may reduce the spread between the IPO price and subsequent market trades, a potential benefit to existing and potential investors. In this way, the proposed rule change may result in additional investment opportunities while providing companies for more options for becoming publicly traded. Accordingly, NASDAQ proposes to modify the pricing range limitation such that in the case of the direct listing with a capital raise, a security could be released for trading by NASDAQ if the actual price at which the cross would occur is as much as 20% below the lowest price of the price range established by the issuer in its effective registration statement. NASDAQ also proposes to adopt a new price volatility constraint and disseminate information about whether the price volatility constraint has been satisfied, which will indicate whether the security may be ready to trade. Again, more halts. Prior to releasing a security for trading, NASDAQ allows a pre-launch period of indeterminate length, of course, during which price discovery takes place. The price volatility constraint requires that the current reference price has not deviated by 10% or more from any current reference price during the pre-launch period within the previous 10 minutes. The pre-launch period will continue until at least 5 minutes after the price volatility constraint has been satisfied. NASDAQ will also introduce the near execution price, which is the current reference price at the time the price volatility constraint has been satisfied, and set the near execution time as such time. This change will provide investors with notice that the cross nears execution and allows a period of at least 5 minutes for investors to modify their orders. Now, when they refer to investors in these filings, they're not talking about you and me. They're talking about investors such as institutions. So it allows them to modify their orders if needed based on the near execution price. Further, to assure that the near execution price is a meaningful benchmark for investors and that the offering price does not deviate substantially from the near execution price, NASDAQ proposes to require, in addition to other the existing conditions stated in proposed rules. They don't even these are so grammatically flawed. Just saying. They obviously speed through these. Anyways, NASDAQ proposes to require, in addition to the existing conditions stated in proposed rule 4120C9B7, that the cross may execute only if the actual price calculated by the cross is no more than 10% below or above the near execution price, which is also referred to as the 10% price collar. And a collar is used to prevent substantial losses, basically. So given that, as proposed, there may be a direct listing with a capital raise that could price outside the price range of the company's effective registration statement, and that there may be no upside limit above with which the cross could not proceed, NASDAQ proposes to enhance price discovery transparency by providing a readily available, real-time pricing information to investors. To that end, NASDAQ will disseminate free of charge the current reference price on a public website, such as NASDAQ.com, during the pre-launch period and indicate whether the current reference price is within the price range established by the issuer in its effective statement. Once the price volatility constraint has been satisfied, NASDAQ will also disseminate the near execution price, the near execution time, and the 30-minute countdown from such time. So basically, in essence, we're going to be releasing these direct listings for trading by NASDAQ if the price at which the cross occurs is as much as 20% below the lowest price in the statement. The cross may execute only if the actual price calculated by the cross is no more than 10% below the collar price or the near execution price. They're also proposing to enhance price discovery transparency by providing readily available real-time pricing information to investors. They're also adopting a new price volatility constraint and disseminating information about whether the price volatility constraint has been satisfied, which will indicate whether the security may be ready to trade. And the reasoning for all this is that NASDAQ believes that a company listing in connection with a direct listing with a capital raise can specify the quantity of shares registered as permitted by the Act, and when an auction price is outside of the disclosed price range, use a Rule 424B prospectus rather than a post-effective amendment, which either 1, the 20% threshold noted in the instructions to Rule 430A is not exceeded, regardless of the materiality or non-materiality of resulting changes to the registration statement disclosure that would be contained in the Rule 424B, or when there is a deviation above the price range beyond the 20% threshold noted in the instructions to Rule 430A, if such deviation would not materially change the previous disclosure, in each case assuming the number of shares issued is not increased from the number of shares disclosed in the prospectus. So again, it seems like a great benefit to institutions, but at least we get real-time pricing information, so that's good. Anyways, that's NASDAQ for you. That wraps up this filing. I'll link it below. Thanks for watching. If you haven't already, if you wanted more info on the community trading group, educational community trading group, check out our website. It has a full tour, and you can check out our reviews on Google, member testimonials. I think we have like 10 spots left, so trying to get those filled. So if anyone's interested out there, come check us out. FudStopTrading.com.